Welcome everybody. In this video, we're going to be covering some economic and real estate market updates and news as of December 3rd, 2024. And we're going to be looking at some data that came out in November for the month of October. Those are the latest data that we have. That's going to be the first half of the video. We're going to talk about sales volumes, inventory levels, average prices, so on and so forth. In the second half of the video, we're going to go through some economic updates. And then lastly, we're going to finish with what you should watch out for in the coming weeks and in 2025. With that said, before we get into it, if you get value out of this video, give it a thumbs up, subscribe to the channel, and what you're going to want to do, since this is a new channel, is you're going to want to hit that bell button. What that does is it reminds you every time I upload a video in the future. That way you don't miss out on those future updates and those future uploads. All right, with that said, let's jump right into it. So we're going to be, as I said, talking about the broad real estate market in the first half of the video. And what I will do is I will link this in the description. So if you wanted to go ahead and take a look at the sources that I'm covering in this video, you can go ahead and do that. First and foremost, we're going to start with this article: surprise jump in home sales in October of 2024. So we had this is basically a summary of that whole article here. We had a 7.7% increase in home sales in October across the country. And to specifically look at where we had the most increase in sales volume, because you may say, hey, okay, great, 7% increase in home sales across Canada, that must be in other provinces. I don't see anything happening in Ontario, in Toronto. But actually what the data shows is that there was 20% increase in the greater Vancouver area. So yes, bigger increase than there was in the GTA. GTA only had a 14% increase. So yes, other provinces are seeing a little bit more activity. And I'm going to talk about some other provinces and the prices when it comes to other provinces as well a little bit later. But regarding the actual sales volume, the GTA did see a good, healthy increase of 14%. And that's month over month. So since September, compared to September, there was a 14% increase in the number of sales. And we're going to talk about why in a moment. Year over year, there was a 30% increase in sales volume. So comparing to October 2023, 30% more sales. That is great to see. That's first and foremost what I want to talk about. Is it's very good to see these sales volumes coming back, because what we went through in 2024 was a year where the number of transactions got cut in half, right? So that created the market that we're in right now, which is a buyer's market where buyers have the leverage, and we haven't seen that in Toronto for a very long time. But the fact that those number of transactions went down, sellers will still need to sell, right? But the number of transactions went down, so the number of inventory went up. Now prices is something that we're going to get into. You would think that when this happens, inventory increases and number of transactions go down, that prices would fall significantly. We haven't seen that happen, and again, I'm going to talk about why in a little bit. But what we can see now is that the number of transactions are going up, and this is a sign of us getting back into a healthy market, which is a very good thing for both buyers and sellers. I think right now we're a little bit tilted too much towards the buyer side. It means there's some great opportunities for buyers out there and some great deals are happening. But at the end of the day, everybody's got to make money, right? We don't want to make money at the expense of other people. And that's why I'm a fan of a balanced, healthy market where transactions are happening, right? Sellers are getting fair market value, buyers are getting fair market value, and there's trade happening. That's a healthy market. When we're in a market where nothing's happening, well, nobody wins, right? And what we see right now is there's a lot of sellers that still want to sell for pretty high prices, and buyers aren't willing to pay those prices, but sellers are also not willing to sell. That's why there's no transactions happening. And that's partially one of the reasons that prices have remained pretty much flat during this phase that we're going through in the Toronto real estate market. But to go back to the numbers, these are numbers that we haven't seen this amount of sales volume since April 2022. So again, that's a good sign that the market is getting a little bit healthier. Very good to see, in my opinion. Let me know what you think in the comments down below, but I think this is very good to see, whether you're a buyer or a seller. And I'm going to talk about what this means for buyers and sellers as well. But before we get into that, let's talk about the average sale prices that I mentioned I would discuss as well. So average sale prices have actually gone up 6%. This is the national average, however, and this is due to prices rising in other provinces. As I mentioned, Alberta is seeing a increase in prices. Quebec and some other provinces. For example, BC, prices haven't gone up, and Ontario, obviously, again, we can see, I think if you live in Toronto, you can you have an idea of what the pricing is like, especially if you're a seller or looking to buy. You probably have an idea, and most of you watching this video, my clients, you probably have an idea. Prices in BC and Ontario have remained pretty much flat, maybe slightly lower on a year-over-year basis on average, right? But nationally, prices have gone up 6%. Now, number of new listings in October was down 3.5% compared to September, but September had seen a almost 5%, 4.8% jump in the number of new listings compared to the month prior in August. And there's a couple of reasons for this. So I predicted this, and again, to some of my clients, I may have talked to you about this, where I said in what's going to happen when we start getting these rate cuts by the Bank of Canada. There's going to be an increase in the inventory levels. Everybody was kind of thinking, especially realtors, that, oh, the market's going to come back, buyers are going to come back out there, right? But it's going to take some time, right, for these cut in rates to actually benefit the buyer, right? It usually takes anywhere between 12 to 18 months for the effects of the central bank's interest rate policy to hit the actual economy. That's why we're seeing the effects of those rate hikes right now, pretty much with this most severity. And so when the rate cuts cycle starts, we're also going to see the effects later on in the cycle. So with that said, we saw exactly as I had expected happen. We saw inventory levels increase, and now thankfully for sellers, at least, the prices again remained flat, as we talked about in Ontario and BC, and prices have even gone up because of this pickup in activity, right? Even though the inventory levels are also going up. And that's again due to, the sellers aren't desperate sellers. They're not going to let go of their homes at any price. They want the price that they want. If they get it, great. If not, they're just willing to let the listing sit. And I've seen a lot of those listings. And I talk to a lot of realtors that say, we're willing to let it sit. It's okay. We're going to rent it out. If it's an investment property, we're going to rent it out and come back to it next year. A lot of condos that's happening with. If it's a primary home that you need to sell, you're in a little bit of a tougher situation. But regardless, what's happening is the prices have stayed mainly flat because of that. In this article, there is a quote from the Canadian Real Estate Association's senior economist, Sean Cathcart, saying that the jump in home sales last month was definitely an October surprise, although with the big interest rate cut of 50 basis points announced during the last week of the month, the increase was more likely related to the surge in new listings we saw in September. So it's not necessarily that buyers are coming out there, again, to go back to my earlier point of it takes time for the effects of the monetary policy to come and hit the economy. It's not that necessarily it's the rate cuts that have gotten buyers out there. It's more that, okay, inventory went up, and as inventory goes up, prices get more reasonable, right? Because if you're a seller and you're thinking about listing your place, you're gonna look at the comparables, and if you're a motivated seller, you're gonna want to undercut those comparables, and as a result, a motivated buyer out there will see that listing and will come and buy it. And that's why the activity increased, and again, as we talked about, prices pretty much remain flat, slightly lower. Now, where do I see these prices going and activity going in 2025? Well, I think I was telling buyers last year in 2023, don't buy right now, depending on your situation. I wasn't telling everybody not to buy, but with a lot of conversations that I had, sounded something like, hey, let's look at the numbers, right? If you want to buy, especially as a primary home, what would it cost you to buy right now versus what would it cost you to rent, right? And let's think about over the next year, what's going to be happening, where are rates going to be, where are prices going to be. And a lot of times it didn't make sense to buy at the time. And obviously there's always risk that, okay, somehow magically the market comes back roaring and prices start going up. But I was pretty confident in 2023 that 2024 wasn't going to be this crazy year where everything was going to get back. Now, my prediction for 2025 is that prices will remain flat, more or less. There's going to be maybe a little bit of increase year over year, definitely nationally, but in Ontario and BC, there's probably going to be maybe a 2-3% increase in prices. And in terms of activity, there's going to be a lot of activity that's going to come back to the market. There's going to be more sales with the rate cuts. That's going to start playing its way into the economy, and more buyers are going to come back because of those rate cuts. But I don't think we're going to see much more rate cuts in 2025. But also because of, again, inventory levels continuing to probably stay flat, maybe increase from here. You never know, again, what the sellers are going through, but what we know is that there's going to be a lot of mortgages coming up for renewal from 2020, 5-year mortgages, and 2022, 3-year mortgages. And as these renewals come up, the rates in 2020 obviously had plummeted, and in 2022 were still lower than the rates that we have now. So as a result, there are going to be some people that are going to need to sell, and that will continue putting downward pressure on prices in the real estate market, not only in 2025 but also in 2026 and 2027. Why? Again, because in 2021 and in 2022 rates were still lower. Now we're going to get to a point where rates are going to drop far enough that they're going to pretty much level out and be the same as rates were, or just a little bit higher than rates were in 2021 and 2022. I don't think we're going to get back to those insanely low rates anytime soon, but it's going to be close enough where sellers are not going to need to sell anymore. And one thing that I'm going to mention later on in this video, something that actually came out, news that came out in November, was that in order to renew your mortgage, you don't need to re-qualify at the higher rate with the stress test. So the stress test adds 2% to whatever your rate is going to be, and that's the rate that you have to qualify at for your mortgage when you get a new mortgage. Well, now they took that requirement off for renewing your mortgage, and that's, again, great news for people who have mortgages in 2026 and 2027 and 2025, because obviously if in 2025 your renewal comes up, and in 2020 you got a ridiculously low rate, 1.5%, 2%, and now you have to qualify at 5% plus 2, right? With the stress test, it's going to be nearly impossible. With all that said, 2025 I think is going to be a little bit of a more healthier market, and in 2026 and 7 we're going to start seeing again the market going towards a seller's market again, or getting more balanced. I think 2025 is going to be still a buyer's market. 2026 we're going to start getting balanced, and then beyond that you can't really tell because you don't know what's going to happen. Is there going to be a recession? Is there not? Is there going to be some black swan event or not? But as of now, it looks like the trajectory that we're on, that things are going to be pretty good for buyers for the foreseeable future, and then things are going to get balanced. And historically, Toronto always goes back to being a seller's market. So that concludes our real estate market update, and now we're going to jump into the economic updates. So firstly, we're going to take a look at, right now we're at a 3.75 overnight BOC rate. That's compared to the Fed being I believe still at 5% or 4.75. So there's a big difference, and that is resulting in the CAD USD pair being the weakest since March to May of 2020. If we look at the Canadian USD chart, we're gonna see that if we look at the 5-year chart, yeah, there we go, that's the 5-year chart. We're gonna see that the last time we were at these levels was between March and May of 2020, in the middle of the COVID crisis, let's call it. We've gotten down to those levels, and that's partially because of tariffs. There's tariff fears, but as you can see, we started to improve, and then we started to come right back down, and really where you see a lot, the biggest difference is right here in the past year. As you can see from here, September, when we started the rate cuts, until now, that slope of the drop has become much more significant, and the difference in the overnight rate, the interest rates, that plays a big part, because with the US dollar being, with the Fed having a higher interest rate, more people want to hold bonds and treasuries in the US. Even I told my dad the other day, hey, he was telling me how he bought some GICs in Canada, and I said, what is the rate? And he said 3 point something, 3.56, whatever it was. And I said, listen, in the US they're doing 4.5, right? So just put your money there. Even though you're getting not the best in conversion, you're gonna get more for your money. So more people want to hold US bonds, and that makes the US dollar more attractive to investors and to other countries, and that puts downward pressure on all other currencies. Now, to talk about a little bit more pure economic numbers, unemployment rate is skyrocketing. There's no other way to put it. We're looking at 6.5%, and if we look at, again, the chart, this is over the past year, right? Since November 2023, and we're at 5.8%, and we were steadily, keeping it there. Then we started increasing a little bit. Then we increased a little bit more. August was the highest. Now but it's 0.1% difference. So, and if we look at the past 3 years, we can see that in 2022 and 2023 we were at 5%. Now we're at 6.5. So that's obviously not good to see. We're seeing unemployment rates going up, and 15,000 jobs were created in October in Canada. I think it was 12,000 in the US compared to like 200,000 expected, which is that's a huge discrepancy there. Canada, the expected numbers are a little bit less. Obviously, our economy is a little bit smaller. But November numbers are coming out this Friday, so you're gonna want to mark your calendars. You're gonna want to watch out for those job numbers because those are the most important. And now we've had the strikes with Canada Post in Canada, and that's gonna hurt numbers a little bit. I don't know if it's gonna show up in this report for November. It probably will because Canada Post started to lay off employees temporarily. And that's going to show up in the numbers. If it doesn't show up this month, it's going to show up next month, and that's recessionary. And a recession is not good for anyone. That will throw all the predictions that I made out the window if there's a recession. So we're going to have to see what happens, but I would be watching out for this if I were you. CPI numbers came in at 2% year over year for October compared to 1.6% in September. So 2% you might look at and you might say it's not too bad, but it's compared to 1.6%. And again, obviously, when you look at these inflation numbers, prices are pretty much, or inflation is pretty much 30% above 2019 levels. Right? So in 5 years, we've gone up 30%. That is 6% a year, right? Inflation. So that's really what we're going through, right? 6% inflation per year, where it's supposed to be 2%, right? And that's why so many people are hurting. And what happens with inflation is the longer the prices stay up, right? If we don't go through a deflationary period, which we usually don't go through unless there's a recession, what happens is the more the prices are sustained higher, the more consumers end up getting hurt. So that's why a 2% number is not really good to see right now. We really should stay in the ones. And now what that does is it pretty much will guarantee an only 25% basis point or 0.25% reduction in rates in December. And the BOC meeting is scheduled for December 11th. So again, I would mark your calendars for that. And November inflation data doesn't come out until after the meeting on December 17th. So again, that's why that this number coming higher than expected will result in only a 25% BP reduction in December. I feel like some people might have expected another 50 from the BOC, but I don't see that happening. And same goes for the Fed. Fed is also expected to only drop rates by 25 basis points versus the 50 that they did last time. And right now there's a 72% chance as of December 3rd, and this changes all the time. If you want to look for yourself, you're gonna want to go to the CME Fed Watch. You can just search it up and you'll see the expected rate drops or rate announcement decisions by the Fed in the US. We don't have that for Canada, but when we look at the numbers and we look at what the US does, we can pretty much predict what Canada is going to do. And this will just also put downward pressure on the loonie, on the Canadian dollar. The longer it takes the Fed to lower rates, the more the loonie gets hurt. And that's unfortunately the truth. And you may ask, okay, so why do I care for this? Well, it's because at the end of the day, we have a lot of imports from the US, right? So if the businesses are paying more for these imports, that does get passed down to the consumer, and that hurts the company's bottom lines, and that results in layoffs and eventually a recession. So it's no good when you think about it in either way. And now there's Trump coming out and saying there's going to be a 25% tariff on all products from Canada and Mexico, and he wants us to secure our border, and he wants us to have more fair trade with them, and whatever you think of that, at the end of the day, politics aside, this does put downward pressure on the loonie, on the Canadian dollar, and it's not good for anyone. So that's something to watch for. These inflation data numbers coming out and whatnot. These are something to also look for. GDP numbers, last but not least, are 1.2% expected GDP for 2024 versus and 2.1% for 2025. Those are pretty low numbers. Again, we're on the verge of a recession. If things don't go as well as these guys are expecting, the analysts are expecting, then we're gonna see a recession in 2025. And these numbers are compared to currently in the US for Q4 2024, the GDP number is expected to be 2.7, and we're expecting 1.2% for the entire year in Canada. That is not a good place to be economically. Now, again, to go back to some of the good news, the 2% stress test was dropped for renewing mortgages, and the stress test is now only for new mortgages. This is again, if you wanted to check out the article that explains a little bit more about it, you can go ahead and check it out there. I'm gonna have these notes linked in the description, and what to watch for in the coming weeks and in 2025. Jobs data coming out for both the US and Canada. In the US, we're expecting 200,000, so let's see what we get. And in Canada, again, let's see what we get. I don't know what the expectations are, but I'm going to be watching out for these, and I may do an update video next week regarding these. We're going to have to watch for negotiations between Trump, Canada, and Mexico on tariffs. And that's going to be important. It's going to play a big role in the coming year, and it's going to play a huge role on what Canada's economy is going to look like in 2025. We're pretty much again expecting a 25 basis point drop in interest rates across Canada and the US. So watch out for that. So that's not too important. What you should watch for is the CPI data for November. Now, when are these coming out? In the US, you're going to want to mark your calendars if you care to follow these data coming out. December 11th, CPI data is coming out for the US, and then December 17th and 18th is the Fed meeting, which makes a lot of sense. So the Fed is going to be able to factor that into their decision for the rate cut. Again, as of now, 72% chance of a 25 basis point rate drop. I think that's what's gonna end up happening. I don't think this data is gonna change anything much. In Canada, it's the other way around. It's flipped. December 11th, we have the Bank of Canada meeting, and December 17th, we have the CPI data coming out. So the CPI data is not gonna factor into the BOC's decision. But again, even if the data came out better than expected, the Bank of Canada right now cannot afford to do a 50 basis drop in points, because again, that hurts the Canadian dollar even more than it has hurt it right now, especially with all the tariff scares. As a result, I believe we're going to get only a 25 basis point drop in Canada in December, if any drops in interest rates. So we're going to be watching out for that. Mark your calendars for December 11th, as I said. And other than that, in the real estate market, what you're going to want to watch out for is any signs of activity increasing, because again, this will eventually lead us into a more healthy market for both buyers and sellers. And watch inventory levels in the coming months and in 2025. And to finish this video off, and again, thank you so much if you made it all the way through. Thank you so much for being here and for giving me your time to put everything together real estate market wise. I think what's going to happen, again, for buyers right now, it's a great time to go out there and look for deals. And in fact, right now I'm looking at deals for myself and my family in Florida. And we're seeing great deals out there, and I'm a big fan of the Florida market because you can get a lot of cash flow. So if that's something you're interested in learning about, you can feel free to contact me. But in Canada as well, it's a great time right now to be a buyer. So if you are in a situation where you can take advantage of that, do it, because again, this isn't going to last forever. Toronto always historically trends towards a seller's market and stays in a seller's market. So you're going to want to take the advantage while you can. For sellers right now, again, this doesn't sound like good news to you if you're a seller. However, with the right prices, things are moving. Inventories are moving at the right prices. I saw a condo that I'm looking at, a building where I'm gonna have a listing coming up. I very actively watch what's happening, and I saw condo come out, 1+1 unit, Yonge and Sheppard, good area, and it got moved. It got sold in 11 days. That's incredible to see in a market where on average it's taking 3 to 4 months to sell condos. So to see that, it's great. And the reason was because the sell price was a realistic number. So if you're thinking about selling, that's what you're going to want to wrap your head around, is the number that you're going to get is probably a little bit lower than, unfortunately, a little bit lower than what you're expecting. So you're just going to want to set your expectations right. So if you are listing, you don't go through a slow bleed where you're paying the mortgage and you're going further into the negative, especially if you're paying all interest. If you had a variable rate, a lot of people are paying all interest right now. You don't want to go through that, right? You want to have the right expectations, set up the place nice, work with a good realtor, and you're going to be able to sell your property. And again, if you can hold on to it, then hopefully in 2025, in 2026 and 2027, things are going to be a little bit better for you. Having said that, thanks again for watching. If you got value out of this video, give it a thumbs up, subscribe to the channel, hit that bell button so that you don't miss out on any future uploads. And I'm going to try to make those ones a little bit shorter. I have a tendency on going on too many tangents, but you'll definitely get this video if you watch all the way through. Let me know in the comments, please. And let me know what other topics you want me to discuss and you want to see from me, and also what your thoughts were on this video. Give me some feedback. I would love that. Thank you again, and I'll see you in the next video.